And joining me now for a closer look at what's playing itself out on that market scene is Byron Lotter from Vestact. Thank you so much for your time, Byron. Not a lot of good news, quite a lot of weakness there on the JSE, especially as we're seeing the resources there being hit quite hard. Also the rand just above that 19 rand level against the US dollar. Our risk assets just not where it's at right now, even though we did have that positive GDP print from China earlier this morning.
Yeah, as you said, it's a bit of a risk-off situation over the last week or so. Ironically, the big drop in the US markets yesterday came from really strong retail sales. So we're at a bit of a situation where good news is bad news, especially when it comes to interest rates. If you spoke to a market analyst at the beginning of this year, you probably would have thought that by April we would have had some sort of clarity on inflation and at the beginning of the fall of the interest rate cycle. But it seems that that's still up in the air, and the drop of interest rates is being delayed every time there's either A, good economic data coming from the US, or B, stronger inflation numbers.
Yeah.
So, that was a very strong theme last year and the year before, when we saw massive inflation increases coming through from the US. So we've still got those indicators leading markets. Yes, some surprising good news from China. It has been pretty tough going there over the last few years, in fact, since COVID, and their unique reaction to the epidemic. That economy has been showing signs of fragility. Unfortunately, they seem to tamper with their economy a bit too much. And I say unfortunately, they are trying to prop things up a lot and, providing liquidity and things like that. But at the same time, they don't really let their big corporate titans do what they need to do to expand and grow and stimulate the economy. But it's still a good thing, especially for us here in South Africa and the globe, for a strong Chinese economy.
Yeah, of course, it's going to be quite interesting to see the numbers that do come out in the next 3 quarters. Of course, we know that they have set their target at 5%, if I remember correctly. So, I mean, this should be good news, considering that, to start off the year, they've started us off with 5.3%. So, yeah. Looking forward to more of those numbers. Not a lot of news out in terms of company earnings on the JSE, of course, as the US is now starting to fire up the earnings season. Ours has cooled off. But we did have results coming out of Purple Group, interim results. We did see that share price with a jump of over 27% this morning. It seems like quite an appropriate reaction, looking at the fact that the company has basically swung from a loss to a profit. Just talk to me about how you have interpreted those numbers with the CEO calling them transformative.
Yeah, the numbers were pretty solid. They also went through some deep cycles recently, when people were in lockdown and markets were going crazy. Everyone was opening up an easy equities account and trading and getting stuck into the stock market, which is great. And, the platform they've built is fantastic. And, their ethos of democratizing investing in South Africa is a great challenge, and they've taken it head on. So I'm happy to see that the results have been good, because they have worked really hard and to build those strong platforms. And I'm a big advocate for equities investing, not necessarily equities trading. So you still need a lot of discipline, and you have to have a long-term view. But I'm sure a lot of people learn that the hard way. But it is great, to have access to the JSE in an easy and efficient manner that they've provided. So good for them.
All right. Well, talking about equities trading and investing, 91 released its quarter four 2024 AUM update. Not a lot of color there, saying that their assets under management as at the 31st of March this year was lower than March last year, but slightly higher than from the 31st of December. What do you make of that? Because also we know that these companies also are very linked to market sentiment and how the markets are actually doing.
I haven't had a direct look at the numbers, but if you're saying that their AUM is down from last year, then that's pretty poor performance, because the stock markets in general had a fantastic 2023. So either they were positioned in cash or very badly positioned in terms of their stock picks and assets. But yeah, I mean, if I was a shareholder, I'd be pretty bummed if I saw those numbers. Of course, there's a lot of moving parts there, and movements of currencies has a big impact as well. But you know, these are very big, profitable businesses, asset management businesses, and once you start building scale, it can really snowball in the right direction. But obviously, you've got to make the right picks and have good house views.
All right. Before we get to the stock picks from your peers, I quickly want to go into Afrimat. Also, not a lot of color there. They came out with their year-end trading statement. The company is saying that it expects to post an increase in headline earnings of as much as 26%. The share was down slightly, but I'm not sure if it was caught up in the broader market sell-off, and particularly the resources.
Yeah, I mean, Afrimat over the last 10 years has been a bit of an anomaly in how well they've been able to do in a really, really tough sector. Every now and then you do get a business that swims against the tide and does pretty well. So, you know, good kudos to management there. Yeah, the numbers looked okay. There's lots of moving parts and things out of their control in terms of the underlying commodity prices and so on. Yeah, I mean, they've done well over the last decade, so they deserve all the praise they can get.
All right, all right. Well, we will get more color when they do come out with their actual results. But before we get to your stock picks, let's take a look at the counters that have found favor with some of your peers.
I'll pick Grindrod. I think, you know, with all the sort of logistics and ports issues that we've had in South Africa, they are in a good position to benefit. They own, I think, it's about 25% of the concessions out of Maputo, so that port has benefited from the problems from Durban and Richards Bay and the likes. And I think they've got a good valuation as well, good management team. So I think for now, given this market they're servicing, it's a good place to be.
My pick is Bidcorp. They are a good 15% off the highs. They've been underperforming, which is great. It presents a nice entry opportunity. You're getting global exposure, world-class management team, and they are hedged if the interest rates continue to remain high or even rise. If inflation rears its ugly head again, they have pricing power because they operate in that consumer staples space. They give you rand hedge quality, and a good management team. I think it's a sleep at night stock in this very uncertain and unclear environment that we're operating in. And so that would be my pick, Bidcorp.
I'll go for Prosus, seen as the internet asset division of Naspers and the largest consumer internet company in Europe. They're also among the largest technology investors with a 26% stake in Tencent, 25% stake in Delivery Hero, and on a very undemanding forward price earnings ratio.
All right, so we've got Grindrod, Prosus, and Bidcorp. Which one would you like to start off there with, Byron?
Well, we've been on the Naspers/Prosus ride for the better part of 15 years, so I know that stock pretty well. Yeah, obviously, the biggest underlying asset there is Tencent, which has the most amazing, incredible business and potential. But as I mentioned earlier, you know, the Chinese regulators seem to shoot themselves in the foot quite a lot when it comes to, you know, allowing businesses to thrive and, you know, really build a massive legacy and network around the country. So Tencent was doing incredibly well up until 3 or 4 years ago. And then the regulators decided to change their tune, and especially on the gaming side of things. So you've almost seen a so-called Chinese discount being applied to a lot of these stocks, and Tencent hasn't been able to avoid that. So the sum of the parts situation with Process, we've sort of a broken telephone on this and always talking about it, but there is still a lot of value there when you add the sum of the parts. And they've gone through various cycles already in terms of the rest of the businesses. At one stage, in 2020s, early 2020s, they were ticking all the right boxes: food delivery, online classifieds, and then interest rates started increasing, and that tune changed quite quickly. But we still think it's one of the best listed stocks on the JSE to have access to. And as they slowly wind down that 10-cent stake and buy back shares, we should see a bit more value unlocked along the way.
Well, another company that's actually considered to be one of the best on the JSE is Bidcorp, and of course it has international exposure there, seeming that also investors have been quite optimistic on the stock, except for I think the last few months. I'm not sure if maybe there was some profit taking going on there, but just your take on Bidcorp at the moment as an investment case.
Yeah, it also actually forms one of the few Vestact recommended stocks listed on the JSE. As you said, the management team have done an incredible job, and it's not an easy business, to deliver food for restaurants around the world at very low margins, and make sure that everything arrives fresh and on time. It's a tough logistics business, but they've managed to do a really, really good job all around the world, and it's a nice way for South African investors to get a bit of offshore exposure, because they do operate all over the globe, Australia, UK, throughout Asia, and it has been spoken of as a potential acquisition target, but for as long as I can remember, it's been an acquisition target. Nothing really to come out of it, but you never know. So no, it's a good business.
All right. Well, another business that you think is good, your stock pick for today, Byron?
So it's a bit of a cop out. So it's not an actual company, but I'm going today with the CSP 500 index tracker, which tracks the S&P 500 in the US, but you can buy it locally. Why I like it is, not every South African has the resources to be able to actually send money offshore and pick specific US stocks. I'm bullish most specifically on the US because we feel that they're still the most business-friendly environment on the planet, and that's where we're seeing all the innovation. So it's not just about getting your money offshore if you are South African, it's also about tapping the places where there are the most growth. So if you buy the S&P 500 index tracker listed on the JSE, you don't need a huge amount of money to get that money, not technically offshore, but exposure to offshore, to the US market. You're instantly diversified, and you've got access to shares like Apple and Microsoft and Visa and Google and Nvidia immediately. So I think that's a nice way for South Africans to get offshore. Solid offshore investment exposure.
All right. Well, thank you so much for that and for that analysis on what is currently moving investors' money, Byron. Appreciate it. That was your midday market update with Vestact's Byron Lotter.